What's going on, everybody? Tyrell here. If you like crypto, on this channel I bring together the fundamentals and the technicals to curate valuable information to help you on your journey. A free way to support this channel is to like, comment, and subscribe. It really helps me out. And to remind you guys, as soon as we hit 250 subscribers, I'm doing a $50 giveaway to 5 subscribers, or 5 commenters really, to celebrate that milestone. And a happy Juneteenth to my people and you as well. A long time coming. All right, getting into the video, looking at the total crypto market cap, we're currently sitting at $1.46 trillion. So we're still just range bound for the entire crypto market cap. Looking at the altcoin market, currently sitting at $795 billion. And looking at Bitcoin dominance, currently at 45%, almost 46%. I honestly thought we were going to crest over and then come down a little bit lower. However, drilling down a little bit deeper, we can see that there's been a resurgence in Bitcoin dominance as of late for the past couple hours. Looking at Bitcoin in and of itself, currently sitting at $35,505. This candle is ending in around 20 seconds. And there's some fear out there that Bitcoin is going to come down a lot lower because there's like this impending death cross for like moving averages. I typically don't look at that. Technically, I just look at candles and price levels because there are so many different factors that influence the price of Bitcoin since it's priced in dollars, which we're going to get into right now. Before we get to that, it's one thing to keep in mind. We could go down a lot lower, or we could just like skyrocket the next day. So this isn't financial advice. This is just my opinion. All right. So as we can see here, it's Bitcoin to US dollar. So we're actually going to look at the dollar index, and the value and strength of the US dollar has increased in the past week because there's been some news from the Federal Reserve that caused investors to place more strength in the US dollar. And I totally get it because there's been a narrative around that the Federal Reserve only has the stated objective of decreasing the value of the US dollar, and they just print money and keep interest rates low, so our purchasing power is decreased over time. I mean, that has been the narrative. But this past week, the Federal Reserve signaled that there may be a tapering of buying bonds that has propped up the US economy. At the same time, there may be interest rate hikes in the future to get us out of this low rate environment. So what like increasing in interest rate does is it increases the strength of that currency. So we're actually going to look at the dollar index. The US dollar index is a measure of the value of the US dollar relative to the value of a basket of currencies of the majority of the US's most significant trading partners. So in this chart, we have the US dollar relative to currencies like the Japanese yen, the euro, the Great British pound, and a couple others. So as we can see here, the value of the US dollar has gone up. And in essence, the value of Bitcoin has gone down as well, because like Bitcoin to US dollars is priced in US dollars. So if the value of US dollars goes up, the dollar value of Bitcoins has gone down. So that's why price isn't necessarily pumping at this time. But there's so many other factors. So looking at the 6 factors that determine exchange rates, only 3 really apply in this situation for this video. So we're going to look at differentials in inflation, differentials in interest rates, and strong economic performance. So differentials in inflation. Typically, a country with a consistently lower inflation rate exhibits a rising currency value as its purchasing power increases relative to other currencies. So in this past year, inflation has gone way above the Fed's stated objective of 2% in inflation rate. So we're currently sitting at 5%, but that's just what they tell us, because if we look at other goods out there, it's gone much higher than that. Like look at wood and look at vehicles and look at housing prices as well. They have gone up substantially. Looking at Bitcoin's inflation rate, we're currently sitting at 1.76%, and this is going to decrease over time as there's a halving every 4 years or every 210 blocks, all the way until the year 2100, where the last Bitcoin is supposed to be mined. So if we have an asset whose inflation rate is designed to decrease, while we have another currency whose inflation rate is allowed to fluctuate over time, because we have a group of people determining the factors at play, we can see this game play out in the long run as we look at this article, because it's a differential in inflation, and typically the currency with a lower inflation rate exhibits a rising currency value. So take that as you will, not financial advice. This is just my thoughts. Next, we're going to look at differentials in interest rates. So Bitcoin doesn't have an interest rate. It's just a currency, a commodity, an asset that only comes into existence by proof of work. So there's no interest rates. However, what the Federal Reserve can do is they can jack up the interest rates of the US dollar. And what that does is it increases the value and strength of that currency, which is what happened in this past week. So if we look at this article, rate liftoff well into the future, the Federal Reserve's latest dot plot projections point to at least 2 interest rate hikes in 2023. Even though this isn't going to be until another year and a half, 2 years, people now are taking that as a signal of implied US dollar strength in the short term. So what this has done is it increased the value of the dollar, it decreased the value of all these other currencies that are denominated in US dollars, and at the same time, it decreased the value of Bitcoin to US dollar. But can they keep this up in the long run? Who knows? What I do know is that Bitcoin is just going to be mined until 2100, irrespective of monetary policy, and it's just going to keep doing its thing. And like what the Federal Reserve is going to have to do is react to some unforeseen scenario way into the future and have to increase rates, decrease rates, print more money, take money off the table, or even go into a digital dollar. So who knows exactly what's going to happen. It's just one thing to keep in mind. And the last factor that I was thinking about was a strong economic performance. So foreign investors inevitably seek out stable countries with strong economic performance in which to invest their capital. A country with such positive attributes will draw investment funds away from other countries perceived to have more political and economic risk. So the two contrasts that I chose for this one are US GDP growth. So US GDP in 2019 was 2.2%. What is it in 2020? It was down a lot. Actually, it wasn't down a lot because of the pandemic. It was actually at 4%. Sorry, I was wrong. Real GDP increased at an annual rate of 4% in the fourth quarter of 2020. Wait, that's not exactly. What was it? So it was down 25% in Q2 when the pandemic hit. And then from Q2 of 2020 to Q3, it was up to like 30%. And then now we're like at 4% for Q4 of 2020. So, depends on which quarter you're looking at. And looking at Bitcoin's hash rate, it's actually dropped to a 6.5 month low after China mining crackdown. So there's less miners out there mining for Bitcoin, and we can essentially determine Bitcoin hash rate as a measure of domestic product, right? And since China's cracking down on it and there's a lot of mining in China, we can essentially like assume that the production of bitcoins has decreased, so like the network's just not as productive relative to the GDP of the US dollar and the US economy. Just one thing to keep in mind, granted, like this isn't the end all be all, there's so many other factors out there that affect the exchange rates of this trading pair, but those are the three that I thought I'd put together for this video, and just curate some valuable information for you guys. All right, lastly, I wanted to talk about some NFTs. I know that for this channel, I mainly just talk about like prices and look at charts and look at some news stories, but I also wanted to talk about some NFTs. And like in the past like couple days, I've just been collecting more NFTs. Like I honestly thought it wasn't like the best thing to come out of like cryptocurrencies, but actually going through the act of collecting some art pieces, digital art pieces, it's really cool. So let me actually move my all right, so looking at some of these digital art pieces, I think it's pretty cool being able to collect these things. Like I thought they were just like JPEGs and GIFs out there on the internet, but a lot of people like put a lot of time and effort into creating NFTs, and one day being able to put these like in my home to display digitally would be really cool. You know what I mean? And like anybody could go onto somebody's like page for NFTs, like whether they're an artist or a collector. I'm typically a collector at this moment, and just find some really cool pieces of art, and really support like this burgeoning economy, because I think it will be a big thing. Granted, like I think more of like DeFi and interoperability and DAOs. Those are like my big three, but NFTs, they're like a fourth that I think is pretty cool for the cryptocurrency space. So here's my collection. I thought I'd show it off to you guys. I'm definitely going to be collecting more and more over time, and we'll just go from there. Once again, to remind you guys, doing a giveaway of $50 to 5 subscribers as soon as we hit 250 subscribers. So if you haven't seen this video, make sure to like, comment, and subscribe. It really helps me out. Once again, happy Juneteenth to all of you guys. This is Tyrell. I'll catch you on the next one. Peace.